Hello everybody, this video is entitled Tesla at all-time high. Is strategy next? Is MSTR next? We're going to talk a bit about Tesla, a bit about strategy. Of course, someone asked me in the comment section the other day if I was up this year, and I feel guilty saying, yes, I'm up nicely this year. And that's mostly due to Tesla. Tesla has been saving the strategy investor. If you've owned a strategy, if you've owned Tesla, you've been doing okay, because pretty much what strategy has lost, Tesla made up in your portfolio. And now Tesla is by far my number one position. The point I'm trying to make in this video is that not all your stars are going to shine at the same time. And on this channel, I have 3 stars. They're Tesla, strategy, and HIMS. Tesla, strategy, and HIMS. These are my 3 stars. These are my top 3. Yes, I like a lot of other stocks too, because I have the itch to own stocks, and it's a passion. It's way more than a hobby. It consumes all of my free time, the stock stuff. I love it. But my stars are Tesla, strategy, and HIMS. CNBC calls it hype. CNBC calls Tesla hype, and they call strategy a bubble. But the wise investor knows better. And, you may not agree with either, right? So one may be pro-Tesla, one may be pro-strategy. To me, I see an enormous runway for growth in both of these companies. I love both equally. I talk about strategy a lot because, of course, Tesla, every other YouTube finance channel talks about Tesla. I guess strategy, there's a few channels that exclusively talk about strategy now, but, it's like not as many as Tesla, so I cover strategy. Of course, if the YouTube interest in these 2 stocks is any indication that, the retail analysts are far ahead, yes, make no doubt, have no doubt. They are way far ahead, and I think it's a good sign that so many people cover strategy. I am not alone on strategy. I've never been alone believing on Tesla, but I was alone believing in strategy, and I was alone believing in HIMS in the early days. Radical ideas, radical shifts in business model, they take a long time to be accepted by the market. In fact, people have made fun of Tesla and their self-driving cars and their robotaxi. They've been making fun of that idea for at least 7 years, maybe going on 8 years. Bitcoin is a very radical idea. People have been making fun of it at least since the block size wars, I would think, 2016. 10 years. Let's call it more than 10 years. People have been calling Bitcoin a bubble and making fun of it. Here's the point. The market did not always recognize Tesla's value, and so this channel is about 3 years old. In the early days of the channel, I thought I would be talking about Tesla. I thought I would get views talking about Tesla. No, we've solving the money problem and all of these big guys. Me, whenever I talk about Tesla, I make no views, right? But that was me 3 years ago. I still had my avatar, 96 views, bragging about how Teslas have 100 fewer moving parts. This one, Tesla makes a car much more profitable than Toyota. Oh, 150 views, not bad. A year ago, it's actually more than 2 years ago, closer to 2 years ago, 3,000 views on this one. Tesla did 169. I remember buying that dip. I remember buying an even earlier dip back in 2023. When I made this video, Tesla was 194. I bought the dip at 169. That was in 2024. Anyways, we've had so many opportunities to buy the dip on Tesla. And actually, when I look up Tesla in my channel, I see I covered Tesla a lot years back. I don't cover it nearly as much right now, but I used to cover it ways back. It's time for Tesla to run. If you look at the Tesla chart, it hasn't been Tesla's time for 2 years, nearly 3 years. 2 years. Let's call it 2 years. We've had a valley of despair for Tesla for 2 years, right? And so you would think being up multiple times on your investment is not earned, is not deserved, but it is deserved when you're sitting through pain. If you take it a little personal, you may be thinking you're sitting through pain. It's prospect theory. Seeing red on the portfolio creates pain. That's why I always say, if you have too much pain, turn off the app, delete the app. I can't do that anymore because of this YouTube channel. But when I used to have pain and see the red, I would just delete the app, go in the forest, take a walk, go on a walk, go on a vacation, do something else. Because the way we're wired, a $100 loss is much more painful than a $100 gain. You make $100, you forget about it 10 minutes later. You lose $100, you may still talk about it a month later, right? That's psychology. That's prospect theory. Pain, losses create much more pain than gains. But the point is, Tesla had a valley of despair, and we just had to sit tight. And so right now, strategy is having a valley of despair of its own. Strategy is having a valley of despair of its own. And, I've been covering strategy for nearly 3 years on this channel. You see, that was still when nobody watched my channel. Like 800 views, 400 views 2 years ago, 400 views. I'm talking about MicroStrategy, a good business. Why invest in Michael Saylor's Bitcoin empire? I already made that video 2 years ago, that other one. Why BTC is my longest term hold and, poised to beat the Denominator. Anyways, so when I was making this video here, let me show you this. This video was shot in early 2023. So that was pre-split. You got to travel back to early 2023. That was pre-split. So the stock of strategy was $25 pre-split, and I was all upset. I was all upset because. Okay, so as I was saying, I was all upset because the stock had been trading at $100, not too far away. In 2021, the stock was trading at nearly $100 pre-split, right? And it was trading at 25 pre-split. And so we were in the valley of despair. When I made that video, strategy was at $25. And you see, that was a valley of despair for strategy. In fact, the screenshot here of that video, so that you see that was 2023. If I fast forward to this screenshot that I just took now, so it may seem like a catastrophe, strategy is trading at 167. At the time of this video, strategy was trading at $25, $24, right? So you're still up nearly a 7x, still up a 7x. Can't be a 10x anymore, but you're still a 7x compared to when I made this video. Now, the point I'm trying to make is that we are in another little valley of despair. Just like this video here, if you look at this screenshot here, that was a valley of despair back then. Look at what the stock did, right? After that valley of despair, the stock went on to do well over 10x. In fact, it went to 500, right? So it was a 20x. And now we're back at a 7x, right? That's the nature of these highly volatile beasts, these highly volatile assets. If you want to experience a 5x in your money, you also need to be okay experiencing an minus 80%. Because minus 80% and 5x are the same thing, right? If you lose 80% of an investment, you have to do a 5x. But if the assets you buy, by definition, is too slow growth, and it's not capable of doing a 5x, it's not going to be capable of doing an 80% either, but you're not going to get the return. The volatility is the return. The volatility is part of the game. Investing for the volatility is part of the game. And so, right now we're celebrating Tesla. Right now we're a little sad about strategy, but strategy will come back because under the hood, the business of strategy is extremely valuable in my view. And here are two of my truths about these two stocks. So I consider both Tesla to be severely undervalued compared to their opportunity, and I consider MSTR to be equally undervalued. And I guess whether one prefers strategy or Tesla kind of depends on whether you believe in the humanoid robot opportunity for Tesla or not. If you believe in the humanoid opportunity for Tesla, you kind of have to believe that Tesla is more undervalued than strategy. If you think Tesla is going to have just robotaxi and that's it, then I would say they're equally undervalued. On the other hand, if you think robotaxi is nothing but a smoke screen and robotaxi is never going to happen, if you were to believe that on Tesla, then you think Tesla is actually severely overvalued, right? And it all depends on your beliefs. But in my view right now, I would say the odds are they're equally undervalued. Perhaps MSTR is a little tad more undervalued. Definitely would look into adding MSTR at these levels rather than Tesla at all-time high. But anyway, what does MSTR do? And I've covered this many times on the channel. But first of all, to believe in MSTR, to look in MSTR, you need to believe in Bitcoin as money, right? It's the same as Tesla, right? To even start looking at Tesla, you need to believe in electric cars. You need to believe in AI. You need to be a very forward, future-driven person. Otherwise, you're not going to look at Tesla, right? MSTR is kind of the same way. If you don't believe in Bitcoin, if you think Bitcoin is a tulip or something, you're not going to look at MSTR kindly at all. And then you also need to believe another thing with Bitcoin is you need to believe that they're never going to fix the money. Right, which is very unfortunate because I would love for politicians to fix the money, but as evidenced by the airport playground areas that they spent $1 billion on last week, and every day there's another thing they want to spend money on. Unfortunately, I don't think they're ever going to fix the money. And if they don't fix the money, that means that Bitcoin has no top because fiat has no bottom. That's the original, chart that I had created for this channel back when I launched the channel, this is the M2 money stock, all of the dollars in existence. This is the euro-dollar system, the dollars held outside of the US system, which we have no idea how many there are. They're dark, they're shadowy. We don't know how many dollars there are outside of the US financial system. We can only estimate, and you read obscure academic papers written by obscure academics, and then you can have an estimate. But based on most estimates, the euro-dollar market has more dollars than actually the M2. So what? We have 60 trillion, 50 trillion dollars right now that are just circulating in cash. We don't know. We have no idea. Bitcoin, we have 21 million. What we know for sure is that, to quote Powell, right, the $40 billion in bonds that they're buying right now every month, where does that money come from? Well, that money is digital. They print it digitally. As a central bank, we have the ability to create money, right? So that's the problem with the devaluation of the dollar. So that's the idea behind Bitcoin is the 21 million. That's that belief. That's the first belief you need to have. And then the second awareness that you need to have about strategy is that, yes, it's true, strategy started as a leveraged play. Yes, they had traditional bonds in the early days, and yes, they still have convertible debt. So it is a little bit of a leverage play, even though most of that convertible debt will convert to equity. So from that standpoint, I would say it's not a leverage play. But if the stock continues the despair for 5 years, perhaps it will have been a leverage play. But I don't think so. I think that convertible debt will equitize for sure. To me, strategy is less of a leverage play, and it's much more of a black hole or a vacuum, a black hole, a vacuum, or a siphon for capital. That's what strategy is. That's why Saylor shifted from the word leverage to the word amplification. We now talk about amplified returns. We talk about the delta between the money that is paid on the preferreds and the money, the ARR that we expect Bitcoin to have. And that delta is probably about 20%. And that 20% amplifies the return of the common and accrues to the common. There's two key innovations in strategy. And to understand strategy, you have to understand that when it comes to strategy, strategy is the product. Strategy is the product, right? And by the way, he's not the only CEO who has said that. Like famously, Bernard Arnault, the CEO of LVMH, said, "Oh, we want to be our stock to be like our Louis Vuitton bag. We want our stock to be expensive, just like our bags, right?" A lot of startups actually look at their equity as their product. The equity is the product. Now, strategy has taken that to the extreme. They believe in flooding the market with their equities, and then they act as a one-way street, a one-way transistor, if you will. It only goes one way, a one-way diode, where the power only goes from TradFi to Bitcoin, right? It only goes one way. It never goes back the other way. So this is like a one-way street where all of the money that you get through the preferred only do a one-way trip to Bitcoin. All of the money that you get from the common only do a one-way trip to Bitcoin. And from Stretch, only a one-way trip to Bitcoin. And I forgot STRE as well here, by the way. So anyways, so that's the point number one. The common equity is the product. That's amplified Bitcoin. That has been the number one product for years now. For years, the equity has been the number one product, and of course, he's made money selling the equity because he was selling it at a positive MNAV. We're still at a positive MNAV, about a 1.12 right now. So you make 12 cents for each dollar of MSTR common that you sell. But that was the early playbook. The bigger playbook is you take that money, you take that Bitcoin that you accumulated via the issuance of the common, and then you use that money to back perpetual preferreds that will never need to be repaid. So essentially, Saylor is betting the entire company, is betting the farm on Bitcoin. His entire life is bet on Bitcoin. And so that's innovation number 2. So it's equity. It's not debt. It's a perpetual stock that is equity, not debt. You need to look at it as another form of equity, a preferred equity, that comes with a dividend. Right? He has equity that doesn't come with a dividend, which is the MSTR common, and he has equity that comes with a dividend, which are the perpetual preferred stock. They come with a dividend, and so that dividend is not the full Bitcoin return. That dividend is a lower return that he pays, and the delta between what he expects to be Bitcoin's return over the long run, 30%, and whatever he's paid, for example, STRK pays an 8% dividend, that delta, that 22%, accrues to the common shareholder. And that's the innovation behind that. And so by creating all of these less volatile instruments, STRK, STRF, STRD, Stretch, and Stream, and I guess Stretch is competing with bank accounts, but by issuing these instruments, he takes the money from all of the assets in the world and puts them into the Bitcoin ecosystem. And he does that by providing a yield through the Bitcoin's appreciation. And so the total addressable market of Saylor is that of instruments, that of financial instruments. And what is the total addressable market? What is the TAM? Well, the TAM is essentially all of the assets in the world without real estate. He hasn't come up with an instrument to compete with real estate. We'll see. He was meeting with JP Morgan and a bunch of banks. Maybe we'll find something to compete with real estate. Real estate, art, gold, he's not operating in this, but he's operating in the bond market, in the currency market, and in the equity market. Stretch competes with bank accounts because it's trying to be this mega $100 stable coin. It competes with bank account. People use it as short-term money, 1 month money, right? STRK, STRF, STRD, and Stream, these compete with the bond market. You look at I don't know, a municipal bond, and you compare a municipal bond to, say, a Bitcoin-backed bond. And of course, he's priced these bonds so that they are much more attractive, much more attractive than whatever is currently being proposed. And of course, MSTR competes in the equity world. You may be interested in buying Coinbase, or you could buy MSTR, buying Tesla, or you could buy MSTR. And of course, here the value is very, very high. We can argue whether the value of MSTR is as good as, say, a very innovative company like a Tesla or like a Nvidia. Yeah, you can argue about that, but it's easier to argue the performance of MSTR against like a whole bunch of S&P 500 companies who are likely going out. And so that's why the products of Saylor are going after a total addressable market of $570 trillion. The key idea, the core premise, the key idea is an idea that dates back to the gold standard. Back in the early days, you could not use cash flows to borrow money. You had to pledge something. You could not use cash flow. This is a renaissance of old world finance. By the way, if you follow DeFi, and if you want to borrow money on Aave, you have to pledge a token. Right? Back then, if you wanted to borrow money, you had to pledge your gold. Right? Today, we don't work like that, because today money is printed out of thin air. So you're like, okay, I have a job. I'm going to have cash flows for 30 years. Lend me money so I buy a big house. That's what we do today, but it didn't used to be this way. And so Saylor is bringing back the old way of creating preferred stock and common stock and debt backed by Bitcoin. And the premise is that debt backed by Bitcoin, just like back in the day, debt backed by gold, that premise is that debt is much more solid much more valuable than debt backed by future cash flows, because we live in a deflationary world. Technology is extremely deflationary. And trust me, I think the Fed's going to have to print so much money to keep the illusion of inflation. They're going to have to print so much money to keep that inflation illusion. In my view of the world is deflationary. I talked about Tesla. Yeah, how much does it cost in electricity to power a Tesla? About $6. How much does maintenance cost on a Tesla? About nothing. How much is those leases on this Tesla? These leases beat everything else. These leases are dirt cheap on these Teslas. We live in a deflationary world, and it doesn't matter. You don't have to take Tesla. If you don't like Tesla, you can ask yourself, say, use Spotify. How much does music cost today? $10 in 1995. $10 would get you 10 songs. Today, $10 gets you 100 million songs. We live in a deflationary world. Intelligence is extremely deflationary. So much of what we do is so deflationary. And so what does it mean for these companies who rely on future cash flows to pay their obligations, to pay their debt? What's going to happen to these companies, right? And so a simple question to ask oneself is, how much is the S&P going to survive? If you look at the S&P, you can see it's the top 7 companies. It's the big tech. It's only a handful of companies who are responsible for the S&P's return over the past 15 years. And if you start, unpacking the S&P and start asking yourself, very, very clear questions. Would you own GM and Ford when you consider how much of their vehicles are financed by them? How much they misprice some of those leases, thinking the residual value would remain super high, and it's not. How much they had to write down at Ford? Would you own Comcast, AT&T, and Verizon in an era where Elon Musk just told us they're going to turn on cell phone by satellite, right? And of course, for people who love ASTS, they know that thesis really well. We're not going to have cell towers for a long time. We're not going to have fiber for a long time. We're going to go full satellite, right? And so what happens with AT&T? We issue 30-year bonds to finance the rollout of fiber, right? Okay, moving on. How about CVS and Walgreens? Do we need 45,000 pharmacies, right? I cover HIMSS all the time on this channel. I cover telehealth all the time. Everything's going remote in pharmacy. It's all going remote. Amazon's disrupting it. HIMSS disrupting it. We're going remote. We don't need 45,000 pharmacies. How about office buildings? I know we live in a knee-jerk reaction to telework right now, and you have a few companies who are forcing employees back in the office. But we've overbuilt. I go in the beautiful downtown of my Texas city, and I look at the beautiful American downtown. I look at this as the cathedrals of Europe, because I don't think we're going to have giant office buildings anymore ever again. And of course, in China, they already acted that, and they did a height limit. I think this era is over. I think the era of crazy, oversized work office buildings is over. So think about all the debt that is backed by that. How about consulting? How about Accenture? What's going to happen to Accenture? Would you invest in Accenture? Would you own Accenture? Do you trust it? How about Credit Suisse? Oh, jokes on me. They already went bankrupt. How about UBS? How about over indebted, banks? Would you do that? How about smaller banks? How about banks in the thousands that there are local little banks? I don't know. Would you do you like that? Would you do that? I mean, how about even old tech? How about even bloated old tech like Boeing? Is Boeing a good investment with how many employees they got and how inefficient they are? Intel got money from the government, maybe a different story, but Intel of 3 years ago, would that have been a good investment? Anyways, all of these companies have their stocks and their debts backed by cash flow. And all of these companies make up most of the S&P 500 in count. In count, they make up most of it S&P 500. In value, that's not entirely true because, you have NVIDIA, Microsoft. I think the S&P 500 as an index is going to be fine. But I think a lot of these companies are not going to be fine. And a lot of these companies are those that issue the debt, by the way. All of the red that you see in there is what issues a bunch of the debt. And so you got to ask yourself, how good is going to be Strategy's debt backed by Bitcoin compared to, I don't know, Walgreens debt backed by their new I don't know, initiative, like Village MD or whatever, or Ford, backed by their highly depreciating vehicles that lose 50,000 when you drive them off the lot. Anyways, I think Bitcoin direct debt is going to be extremely compelling in the future. So compelling. Bitcoin and strategies, Bitcoin-backed debt will fix so much malinvestment. And if you go back to reading any of the classic Bitcoin books, they tell you about malinvestment that goes on with fiat, all of the poor investments, all of the money that some companies spend just trying to stay alive, just trying to make it for another year or for another decade, all of the ill-fated investments that a lot of people do. This is fixed by Bitcoin because, of course, the rate to land Bitcoin is a much higher rate than the rate to land fiat, because fiat is created out of thin air. Bitcoin cannot. So if you ever land your Bitcoin, if you ever need to borrow Bitcoin from someone, they're going to want a 20 or 30% yield to actually give you the private keys, because that's actually the worth of money. That's actually how much people want in a return to borrow that money. And of course, we've forgotten about that since medieval times. Since medieval times, we haven't seen these rates because of the invention of double entry accounting by the Medici. It goes back this far. Anyways, Saylor's instrument, that's the cherry on top of the cake. They give you a tax-deferred yield. They give you that tax-deferred yield. And so that means you start paying taxes once you've recouped your entire investment, which is about 10 years for most instruments. So effectively, a lot of investors, if they have a 10-year horizon, if you have a mid-term horizon, effectively, you're going to look at these instruments as tax-free, which is stunning. So anyways, I have no doubt this, stretch is going to get back to 100. It's going to take however it's long going to take. Strategy is going to go back up. It's going to take however it's long going to take. And Bitcoin's going to go back up. And, think about the value of despair. As you see Tesla shareholders rejoicing, think about the value of despair that they've had to go through. Think about all of the times Tesla investors have gone crazy mad because of XYZ news taking the stocks down. Frankly, we are going for a similar period at Strategy. But frankly, we've had it easy. It's been a slow bleed. It has been a slow bleed, which in many ways I think is easier to handle than some of the Tesla swings. Strategy has been a slow bleed, so we've kind of eased into a huge drop, I would say. We haven't had it overnight. Some stocks, sometimes Tesla or HIMS, sometimes you can have that drop overnight or near overnight. So anyways, hopefully this helps out. Hopefully this tells you where I stand. This was not investment advice. This is not financial advice. This is only entertainment. This is an entertainment channel where I just share my hobby with you. That's all I do. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.